39-year-old Wendy Ng runs a spa providing a range of specialised hair and scalp treatments. The mother of four worked in Singapore as an accountant for about 10 years before returning to Malaysia to start a family. Wendy was able to benefit from the currency exchange rate in the past, but she's now feeling the effects of the weakening ringgit.
At the point of time when I was working in Singapore, the currency was 2.8. It was really good because that time I don't have children, I'm not married. So whatever I earn, I use it for my own spending. I was very comfortable, especially when I come back to Malaysia, I can spend, I can buy the things that I like without much consideration. Fast forward back to now, 10 years later, I have 4 children. And then of course, the financial burden is different, and we are earning Malaysian ringgit. Of course, we don't have the advantage of the currency exchange. With the Malaysia ringgit depreciating, yes, we feel the pinch of rising cost of living.
Wendy and her business partner Joyce opened their hair spa in Johor earlier this year. They're benefiting from an influx of Singaporeans who spend their weekends in Malaysia. But the weak ringgit is taking a toll on the business and their finances.
The product cost has increased tremendously. We are imported all the products, and it's all natural plant-based. And at the same time, the cost of the rentals, the cost of the utilities, I have to make sure that my good staff stay with us, that we provide them like good accommodations. So these all expenses getting into our financial cash flow, and it does impact me in a way that because we invested using our own money. And it's not investments coming out from investors or anyone. It's actually from my own money, and my partners come up with her own money.
The ringgit has weakened the most among Asian emerging market currencies in 2023.
Dollar ringgit has reached levels, historical levels that are moving closer towards what we saw in 1998 during the Asian crisis. Purchasing power of resident citizens are actually important. For those that are travelling abroad, they will feel the pinch because the currency rate would be much weaker.
My family is quite big, so when last time we have only me and my husband and maybe just 2 children, we can have the luxury to maybe travel to overseas more frequently, like maybe once or twice a year, something like that. But now, because the weakening of the ringgit and everything, so when we make decision on family holiday, we will look around more in Malaysia, like is there any place to go that's equivalently, nice, and yeah, so we will budget a little bit more on family traveling.
To protect their money, Malaysians are also looking for ways to hedge the weakening ringgit. Analysts say that the obvious step is not to have your wealth tied to the local currency and to have it transferred to value-preserving assets.
If you are a savvy investor in Malaysia who have been investing in dollars, dollar assets or UK assets or Singapore assets, the benefits are triple-fold, double-fold, and you could benefit from that. So it depends on which segment you're in and whether it offsets. In some ways, it could offset it quite significantly if you are actually invested abroad rather than in Malaysia.
The most straightforward method is to actually convert some of your net worth into a foreign currency that you deem would be much stable compared to the ringgit. So, and there are so many banks and so many financial providers that offers these kind of facilities. And there's always the old way of preserving wealth, which is actually to convert some of your current wealth into gold, be it physical or even paper gold, to actually help to preserve your net worth when you are currently holding into a weakening currency like a ringgit.
For those with a higher risk appetite, the global stock market offers the potential for attractive investment returns.
Personally, I would opt to go for stocks and equities because at least stocks and equities, they do provide a certain return, right? So you can invest into companies that pay you a dividend, and year in, year out, if the company is stable in terms of the business model, the predictability of the company paying out dividend is actually cash going back into your pocket.
Over the years, we do actually notice the weakening of the ringgit. So hence, we started to invest in foreign stocks, for example, as one of the ways to hedge against the ringgit.
Certain lifestyle adjustments may also be needed to cope with the rising costs of living.
Households, I suppose, need to be a bit more careful in terms of expenditure, especially on higher value-added imported items. If possible, if you can find domestically produced goods which are priced in ringgit and with lower costs of production because of domestic costs, which are much more conducive to foreign costs, and there's no translation gains from currency moves, it would be better to move towards those type of products.
In terms of the overall family planning, of course, first we have to be more careful in our spending, like we try to eat at home more rather than eating out. This is one. And also we try to look around our houses, is there anything that we don't particularly need anymore, we actually resell it. And also if there's larger spending, we either delay the spending or we think twice if that's necessary.
Driven by external factors, analysts say the ringgit is set to remain weak.
The downside risks are there, mostly from higher for longer, mostly from the China softness continuing further, and also on the central bank policy moves. We would expect ringgit to continue to see pressure relative to the dollar and relative to some of the stronger currencies in the region like Sing dollar.
Now is a very good time to actually make the adjustments soon, so that when the weakening ringgit comes to play in the entire value stream, then at least they won't be forced to actually make a sudden switch from a much more comfortable life into a much more less comfortable life if they really need to, eventually embrace the downgrade in terms of their lifestyle.